Compass up 5%, which takes us to housing. Mortgage rates falling. Home sales actually rebounding in recent data. Compass CEO and co-founder Robert Reffkin joins us here at Post 9. Music to your ears, right? Hearing Jay Powell spell it out about the time to cut rates.
Today is a good day for Compass. It's a good day for real estate. To hear him say the time has come for policy to change is music to our ears. It's been nearly 3 years of a rising rate environment, and we're looking forward to a declining one.
Well, we've already seen mortgage rates and Treasury yields fall in anticipation of this move. How much activity has that brought on?
So we see more inventory, 20% more inventory than this time last year. We saw existing home sales yesterday up for the first time after 4 consecutive months of decline. But we're not yet seeing buyers rush back. What we're hearing from our agents, and we have a very unique perspective, nearly 30,000 agents. We're the #1 brokerage firm by sold volume for 3 years in a row. What we're hearing is that buyers are waiting for the September 18th cut. What they see in the headlines is, the rates are going to go down on September 18th. And I think there's a misunderstanding of how much of that rate cut is already baked into today's mortgage rate. So it's actually a good time to buy in advance of September 18th because you'll have effectively a similar mortgage rate with less competition.
Right. So they think the Fed is actually going to lower their mortgage rate in September, which is not right. It's the market rates.
Can I ask you about the rental market for a second in New York City? New York City, which, of course, was counted out 3 or 4 years ago. I got this recently from a large owner of rental apartments. Just give me an update on what they're seeing. 63 throughout their portfolio, huge surge of tenants moving into New York. Currently, 63.5% of new tenants are tenants who are moving into the city for the first time. Highest they've seen on record ever since they started keeping track since 2010. New inventory as a percentage of total inventory, 0%. A crisis they're talking about in renting space in Manhattan. Property fundamentals booming. And then they go on to say as well, the tenants have high earning potential and are paying high rents. What's happening here in New York?
I think we're seeing a return to a theme that lasted decades before COVID, which is people moving from the suburbs into the cities. And New York is one of the biggest beneficiaries of that.
So it's real?
It's very real.
And are people going to start buying apartments as a result of being unable to rent them?
Well, rental inflation, we're finally seeing, at least from a country perspective, we're seeing it flatten out. The prices have not increased over the last number of months, which is a good sign for inflation.
You mentioned inventory, and it seems like the real growth in inventory is in the supply of new homes, right? Single family new?
It's new and existing. But we just saw today that new home sales saw nearly the highest increase in new home sales since early 2022.
Right. So what happens to pricing even if demand holds up? What do you think, given that surge in inventory?
Yeah, I think prices will continue to remain high. We have 4 months supply right now. 6 months means a balanced market between buyers and sellers. So it's still a seller's market.
Are you at all worried about Florida, Texas, which we've talked about a couple of times last couple of months?
So what's happening in Florida is very unique. Florida has a new rule for old inventory, which will require the owners of the condo buildings to put in a lot of money to fix it up. And so there's been effectively a rush of inventory of old inventory. I think you even see today in the new home sales. The new home sales have bounced back faster than existing home sales. People still have money. They want to buy new things. The markets with high income markets have performed better than low income markets. And it's Florida with this old inventory. It's a unique problem.
How much pent-up demand is there? We hear about the lock-in effect, right? People not moving because they have the low mortgage rates, but want to. So, A, what kind of rate will stimulate that, and how much demand will there be?
Give me anything with a 5 on it. 5.999 for 3 months, not just a day. And I think we will see a seasonally adjusted annual rate of home sales back at that 5 million or above. And the home sales have been between 4 million to 7.2 million over the last 30 years. Last year was 4 million, so the lowest since 1995, 28 years ago. So we're in a historically depressed market, but anything below 6, I think the market bounces back.